Welcome to the Heat Check, the part of the show where we look at the hottest meme names in the market right now and see if there's any substance to all the heat. Obviously, the Heat Check, right? So we're going to look at 4 meme-worthy names that are available in the market right now to you, for you to consider in your portfolio and see if there's any substance to what's going on with these companies. Maybe there's a technical trade based on certain levels we can look at. If we look at any speculation, see if there's anything there as well where there could be something a little bit deeper. So I got 4 names for you today. We got Gamestop, Aehr, Open, and OSCR Health. So we're going to take a look at Gamestop first. Now, Gamestop, obviously, if you haven't heard of this one, you've been living under a rock. It was the proponent of the entire COVID trend, where I'm sure a lot of you probably came into trading in general. When everyone was stuck at home, we needed something to do, and everyone bought GameStop stock and it went to the moon, right? Well, GameStop is sitting at a very interesting level. Now, they have a treasure trove of cash at this point. They have raised, I think they have like $9 billion in cash, something like that. They have a ridiculous amount of cash that they're sitting on right now. And they're actually sitting at a very interesting place on the chart. Now, they've diluted their shareholders quite a bit, to be fair, and they're currently sitting at about a $10 billion market cap, which is an interesting point for me in what I'm looking at GameStop. Now, trading GameStop, you got to take a few things into account. You're either trading on a turnaround strategy, or you're trading on, well, I guess both things: turnaround strategy, technical levels, or if they can literally change their entire business, which is a turnaround strategy, but one of them is more based on if you believe in their current business model, or if you think a newer business model may be something to consider. Now, with as much cash as they have, is almost the same size as their market cap, it's interesting, right? To have a company have almost as much cash as the size of the company is something to at least make you interested in potentially considering it. I like it because of where it's sitting on the chart. Now, this 6399 level, which it's literally at right now, as I'm talking about, it's at 24, has been 2399 level, has been a very key level in this stock for forever now, forever and ever and ever. This seems like such a key level for this stock, and it's just above it right now. And ever since we had this quick little sell-off here on the back of earnings, it's been quietly making higher lows. Now, not by much, but a very little bit. As it supported or found support basically down here in the low 22s. Now currently, again, up near 24 bucks. Left this massive gap behind, and it is also underneath all of its EMAs and MAs except for the short-term ones. So a little bit of a, I would say, indecisive on the shorter term scale. However, if it breaks above the GP here, so that's at 24.72, this could look pretty solid, but not without its risk, obviously. Again, outside of what you think about the company in general, depending on your outlook in terms of time, this could be something that you sit, especially at this value. And even if you're playing it only to 30 bucks or something, you still get about 20% upside for pretty limited downside. Even if you're looking at 20 bucks as a stop, which would be very aggressive to the downside, you're risking 10 to 15% for 20 to 25% upside from where it's currently sitting. Now, the weekly is looking a little iffy. But the monthly, the way that the chart's shaped out, which I got all these doodles here, is super tight, which is why I'm interested in this name at this level and where it specifically is on the chart. And as you can see, even on today's candle, where we wicked and your GP's here, these 2 golden dotted lines here, that's your golden pocket, and actually rejected back underneath it. So this is a trade that I'm personally interested in, and to full transparency, I do not have longs in any of the stocks that are on today's heat check, but I may consider them after the filming of this segment. What is interesting to me is considering a long position around this 24 area with a tighter stop, right around like 23. So that way I'm risking only about like 5% or so, but I've got this huge gap here. Now, that's not saying it's going to fill right away, but there's a big opportunity here eventually to the upside around 29 bucks. So I don't hate GameStop here, but it isn't without its risk. And I would say if you do consider the risk on GameStop, you'd have to manage a stop, and that stop would be managed essentially no lower than yesterday's candle at 23.05. So maybe 23 stop, 22.9, whatever you may want to do. That's where I would consider a stop there. You risk your downside, and if you're patient, could have a nice little upside move eventually. Next stock on the list, Aehr. Nice little gap up today, kind of shot up here real quick. Now, this was a stock I was long for quite some time, and I sold out on. Boo-hoo. I was down here in the $8 to $6 range, and I missed the train, and that's okay. It happens sometimes. But now I have no exposure, and I believe they had some news, right? This is an AI company. I believe they do drones, right, if I remember correctly. Yep. And now pushed up high on some news and gapping above old gaps as well. Main reason why I wanted to bring it up is it's tapping the 200 MA on the weekly. However, the monthly is actually turning looking at your MACD, turning bullish, turning to the upside, showing some momentum, bouncing off that 200 MA on the monthly, which is an area, and I love my 200 MA across all time frames, an area you should keep an eye on. So now that's moving a little bit higher here, and it's not without risk, just like GameStop, and I do think it's chasey here. So what I would personally look for if I wanted to have a long in AEHR, I would look for it to come down and base no lower than this 1581 and ideally sub 1723. So we shoot up here, kick around here for a day or two, come back down on lower volume and find some space in here between this 1581 and that 1723 area before considering a long, and assuming all technicals look good at that point, then consider a long. It is very chasey here. It's been on a rally. If you're already in, God bless, you made money. But chasing up here could be a little chasey. Like I said, they had some news today which caused this nice 20% pop. But I would be very careful. It's got pretty good volume here. This could be a move where it could move more parabolic, so it could have another push the next day or two, to be fair, especially with retail-driven sentiment, people FOMOing in. But this is, if you're more of a patient investor like myself, you do not want to consider at this level because the risk reward isn't that great, especially when you're looking at key basic resistance levels, the 200 MA on the weekly, and on the monthly, you've got the 50 MA here as well. So on the monthly and on the weekly, it's at a point where it probably is going to reject, it probably needs to come down, but at that point, you'd have better risk to reward if you do like this name, letting the AEMA catch up, again, farting between this like 1723 to 1581 area is an area in which I could see a long possibility with a managed stop. Next one's open. Now this one was hot, right? Yesterday, this thing piled up. I mean, look at the daily, or I'm looking at the 5 minute here. Got all the way up to 497, and then it lost, what was it, like 40% of its value into the close. It was crazy. It was a crazy move. And now today, grinding back up, dropping at the open. This is obviously extremely volatile. Another name that's in that e-commerce area, AI area. They operate a marketplace, essentially. It has been making a parabolic move here, and you've got a bunch of key LOIs in this area. So this is not an area where it's very clean. You have earnings coming up on the 5th of August. If you are a bull here, I'm not saying it can't go higher. You may have done more research than me. God bless. Believe in what you believe in, especially if you got it at 50 cents. You don't got much to lose, really. But if you're someone who's new or considering this, it is very chasey here. Now, to be fair, it's not as small of a company as it was when it was 50 cents. It's now a $2.5 billion company in terms of market cap. I think if I wanted to consider open, I'd want to look for a retest down here. Chasing these names, and as you may have noticed, the theme of this little segment is a lot of it's chasing, right? A lot of these meme names are hot and they're exciting. You're chasing. So unless you're scalping, you're moving very quickly, these names are going to burn you more than likely because the opportunity is already gone. The opportunity was down here or here or here. It's not up here. You are the people buying GameStop when it's at 500 thinking it's going to go to 1 million because MOAS, right? So that's the point where you don't want to consider purchasing. It's already taken off. You've missed the boat. Doesn't mean the boat can't take another ride again, but you need to let things cool off. And where the level that makes the most sense to me, and you can even see if I zoom out here on the daily, decent level of consolidation between 261 and a $180. So in that range, if I really liked open and based on how the technicals would look at that time, that would be the spot in which I would consider a long if I was to consider a long on open. Anything north of that, especially at this point with how parabolic this is, it's very, very risky. Now, their volume's been insane. Yesterday's volume was 1.9 billion shares, right? So huge movement on the market in general. I think that earnings is going to be a big catalyst as well. And I think if I was long, if anyone was long 50 cents down here, you're more than likely take your profits. And that's why the volume was so high yesterday, because if I owned a bunch of shares at 50 cents, I could sell a bunch of shares at $4. The volume's going to spike through the roof, right? Because you can accumulate at such a cheap value and sell those shares for so much more at a higher valuation. The volume's going to go through the roof. And that's where we're probably starting to see some profit taking. In fact, if I zoom in here, let's go to the 4 hours. Good. This is 4 hour with extended hours on. I actually would consider a short as a day trade. Now, I haven't talked about this on the program because I'm filming this live. but I'm actually looking at a potential short right around $4. And I might have missed the boat on this because it's already tapped that $4, fired down to like 280. But if it recovers and it can't break $4, like even just $4 flat, that is a decent short opportunity here on the 4 hour. So that's something I'm keeping an eye on. Me personally, if it pops back up and stays sub 4, I may open a short opportunity, and I'll be very conscientious. The IV percentile on this thing is as high as it possibly could be. It is at 100%. So you are paying high IV. So if you are buying puts specifically, you're going to be paying an elevated price for those puts. So just be aware of that. Maybe consider something like a call credit spread that could offer you that exposure, that short exposure, while also benefiting from that IV decay. Something to consider. Last name on the list is OSCR. Now, OSCR's been a very interesting one. They actually had they basically mentioned today, and they had earnings, that they guided up, but they missed, or not they missed, but they're worried about the ADA stuff and whatnot, but they still guided up, which is peculiar to me that they guided up, but they're giving many warnings that they could make not as much money as they originally intended to, but they still raised their guidance. And stock is reacting today, as you can see, it's up about 4%, and moving pretty okay since the open, all things considered. In quarter two, and can you see that on the screen? You can't. Oh no, you can. They had a hefty loss, so that's what you're seeing right there. When they reported that, but they're basically saying that they're going to guide up even though they missed. In the future, they're going to make more money. And you got to remember, the market's always forward-looking. So even though they lost money yesterday, if they say, hey, we're going to make a bunch of money tomorrow, the market would tend to like that more. And that's probably what you're seeing here as a little bit of confusion. As some people are selling, some people are buying. Obviously, more people buying than selling because the stock's up. As more people are betting on the future of OSCR. Now, this is one of those, again, hot meme names at the moment. Recently had quite the downfall, all the way from 22 all the way to 14. You're below all your EMAs and MAs. I mentioned on this program maybe 2 or 3 weeks ago, this is actually the spot where I was looking to add, and I did not add today or the other day, so I did not do that. So again, I have no long exposure at the moment, but between 1267 and 1320 is and was the sweet spot to add. Now, if we move up and we reject the EMA on the daily, there's still a chance we grind back down to that 1320. And at that point, I definitely look to add, as I'd be roughly the third touch of this general area where I'd look to long. I would not short this name at all unless it breaks under 1267 with volume. That's a keyword, with volume, because the way the weekly and the monthly look are actually not that great. This monthly candle sucks, to be frank. This is not good. Last monthly candle, ooh, looks exciting. This one, awful. And what I really don't like about it, currently, the month's not over, but currently it's a bearish engulfing candle on higher volume. That's like double bear negative. We don't want that if we want to be a long. So the way that this month ends is going to be very important. Looking at the weekly as well, this is an awful weekly. Pushed up, coming shut down pretty sharp, sitting at this POC here on the weekly. MACD is flipping down as well. RSI pretty neutral, so momentum's pretty flat. But you're sitting right here. I think how this month ends is going to be big, so I don't necessarily want to rush it. If we do tap, again, that 1320 area where I want to consider getting long, mainly because of how the monthly and the weekly looks. And going further back, at least looking at the monthly, if that closes and pushes lower, especially if it breaks at 1120, which is the bottom of this, basically the 52-week range, this could get all the way back to $5. So this could get bad quickly. And the other reason why I'm worried about it getting bad quickly, if it does break that level, is because retail owns it. And what does retail do? They go, and sell everything, right? I'm losing all my money. So that's why I'm more concerned about this stock specifically. And I'd actually rather short it if it got down to that level and broke, especially breaking this 1267, which he broke it in pre-market today and rallied up pretty quickly. Getting down there, I mean, this 1120 is going to be a clean short. If this breaks 1120, I would short heavily, OSCR. Heavily. But 1267, you could still take a short on it. I would prefer to be a long, but just because of how the weekly and the monthly is shaping up, it definitely is at least screaming exercise caution, unless today, tomorrow, and the next day, we push all the way up and get north of $15. It is not looking good, though, to be fair, on OSCR. Now, guys, that was the heat check. I hope you enjoyed the segment. We covered 4 really hot names in the market right now, so hopefully you took something away from it. Again, those names were GME, Aehr, Open, OPEN, and OSCR, OSCR. If you liked it, please do me a favor, like and subscribe, and drop a comment below.